All right, welcome everybody. Looks like we're right on time, so we'll get started. And we're going to talk about options trading on autopilot using a secret algo to automatically enter, exit trades, doing this in just minutes a day. So if you've traded options, you're going to love this secret technology. And if you haven't traded options, you're going to realize how easy it is. So with that said, let's go ahead and get things started. This is a live webinar and it is being recorded, so you will receive an email with a link to the recording. So check your inbox, your spam folder for that. And be sure, if you need a review, you're watching that before it expires on Sunday evening. So let's talk about speculation. There with the Duke brothers from Trading Places. Remember, we accept risk, hoping to profit as prices move up and down. And with that said, look at our risk disclosure here. It's important to pay attention to the risk involved. There's risk of loss in trading futures and options. And past performance is no guarantee of future results, and only risk capital should be used. All right, here's what we're going to talk about. A little bit about us, some of the common barriers to trading, looking at indexes versus individual stocks, high probability trading, live demo with some trade alerts. That's a really great part of the webinar. People love that one. And then, of course, we'll have a special offer for you and with some FAQs as well. So a little bit about AltaVest. Since 1997, we've been an introducing brokerage firm. All of our staff, of course, are licensed. We have at least 25 years of experience per person here. We're futures and options specialists, traded millions of contracts. We're federally regulated with staff in California and Illinois. And mentioning experience, we trade a lot of S&P 500 options. Look at the growth in the option space. That's a graph from the CME group, which is where those options trade. You can see dramatic growth. We've been a big part of that over the years. So great place to be, and we're going to talk about why that is. So we've learned a lot of things along the way, what works, what doesn't work. And we just like to look at it like Thomas Edison did. We just found 10,000 ways that don't always work. So what do our clients say about us? Here's someone been a satisfied client of AltaVest since about 2001. Very good. And here's Alex all the way from Italy. He's been with AltaVest since 1999. They really are professionals. All right, great. Thanks, Alex. And who am I? I'm Eric Gebhardt. I've been doing this about 28 years now. And I'm a co-founder of AltaVest, licensed since 1991, federally regulated, of course. Have my BS in Business Administration from the University of Southern California. And I got started way back when I had an investments course, and there we go. Here's my book, open to the chapter 19 on options markets. So that's all my note taking there. I thought it was pretty quite interesting at the time. We were looking at crude oil prices having doubled in value in just a week or two as Saddam Hussein invaded Kuwait. And then I did get involved in the mutual fund industry with my securities licenses. But I think the futures and options markets still intrigued me, so I was able to get hired at an options trading firm, and that is where I learned all the various ins and outs and techniques on options trading and spreads and everything in between. So here we go. Let's stay till the end with no distractions. Let's do our best to put our texting and web surfing away. I know we all tend to do the same thing, and I've done it too, but we'll use our time wisely and then we'll look at a live demonstration. So here we go, and get ready for that special offer at the end, something worth over $18,000. We'll show you how to get on board for free. So the 3 common barriers to success. We need these hurdles out of our way. 1, too much noise. How about this? Every day you see things like this. Here's JP Morgan saying the one thing that keeps the stock market soaring, and then Goldman Sachs in the same breath says the stock market is hurtling toward disaster. So you can see this every hour of the day on any financial website. Even major media pundits, the best in the business, Jim Cramer, they can be wrong too. Back in 2008, someone asked him if they should be worried about Bear Stearns. He told them, no, don't move your money from Bear. Of course, they should have moved their money from Bear, but nonetheless, not to pick on anyone in particular, just to point out that there's a lot of opinion in the market, and it's difficult to know who is going to be correct and who is going to be wrong. So how about this other hurdle? Past performance. Let's look at the top ranked actively managed mutual funds. What if you just picked all those 5-star rated mutual funds and chased that performance? Well, there's something called recency bias. And this is interesting. If you were awarded a 5-star rating on a fund, only 12% of those did well enough over the next 5 years to earn a top rating. Then 10% of those even got a rock bottom rating. That's from the Wall Street Journal article, Morningstar Mirage. So here's what it looks like. If you're 5-star, after 3, 5, 10 years, you become a 3-star ranking, and a 1-star comes up to about 2. So everything converges after a period of years to an average ranking. So remember, past performance does not guarantee future results. What about picking stocks and funds? If you're not going to pick mutual funds, and what about, picking individual stocks? Well, that's probably even more difficult, and we'll show you why in just a second. But you probably know the reasons why. You have to pick the correct actual stock and the direction, the strategy, what strategy are you going to use, the entry timing, and your exit uh, price as well, and timing. So all these things have to be perfect for you to succeed with picking individual investments. Turns out that monkeys might be the best stock pickers. Here's a simulated test here with monkeys picking 100 monkeys picking stocks, and the average monkey outperformed the index by an average of 1.7% per year. So if you want a hedge fund manager, I think you can rely on a monkey, is what it sounds like. And emotions, they tend to be our own worst enemy when we're trading. We have bad wiring. We're wired with a built-in bias to make poor investment decisions. You basically end up selling the lows and buying the highs out of fear and greed and all sorts of emotions running through us. So remember, markets are always correct and we aren't. It can be expensive trying to convince the markets that you are correct. We also tend to unnecessarily overcomplicate matters. Here's a great looking graph, but I have no idea what it means. So let's break through all those hurdles. Let's simplify things, and let's talk a little bit about stock market indexes and some individual stocks. So as you know, an index represents an entire stock market, such as the Dow Jones, the NASDAQ, the S&P 500. S&P 500 was the S&P 90. Now it's 500 stocks, of course, and it's considered the best representation of the U.S. market. And there's a graph of the S&P 500 going back since it started back in the 20s. So why track an index? Well, they're convenient. You follow 1 or 2 or 3 indexes, not thousands of different stocks and funds and ETFs. Also, it's less volatile. An index might move, maybe 3% in a day. That would be a big move. But stocks can routinely move 10 or 20 or even 50% in a day. They can be very volatile. Here you go. Here's FedEx and the S&P 500. This is just recently here with FedEx. You see here is that the S&P, the blue line is kind of moving along. And meanwhile, you see FedEx there on some, I think it was earnings, and it just completely fell out of bed there. So here's another example, Ameritrade versus the NASDAQ, which is where it trades. You can see it just lost, I think, 25%, I think, in about a day or two. There's Tesla. Look at the difference there in volatility. S&P 500 looks relatively flat, upward sloping. Meanwhile, Tesla is really all over the map, very volatile. And of course, Facebook, from one day to the next, this is a 5-day period of time, down 21%. Here's the NASDAQ in that same period of time, only down 3.8%. So big, big difference. So remember too, there's non-correlation. A stock may be up one day and the index might be down, or vice versa. Here's Under Armour up 2.4%. At the same time, the S&P was down 1.6%. So just a brief review on the indexes and individual stocks and the difference in volatility. So let's look at probabilities. Let's talk about insurance companies, casinos, how they use probabilities. Insurance companies, they collect our premiums and they're paid to assume, manage risk. They sell time, they manage that time, but they do hedge themselves by reinsuring themselves. They're consistent and patient in their business model, and they know that probabilities in the long run do favor them. They just use statistics, that simple. They use math. I'm sure you've heard of actuarial tables and things like that. So they're just looking at probabilities and math, expected return, those types of things. We're going to show you in our demo how we do something similar. So you'll want to see that for sure. And the casino is the house, right? Everyone calls the casino the house. Talk about roulette. There's 38 numbers. You bet on one of those numbers, let's say the green zero, for 38 spins. You're going to win one time and lose 37 times according to probability. You would win $3,500 on the one win, but you'd lose $3,700 on all the other losses. So your net loss is $5.26. And really over time, that is the house edge. So how do you be the house? How do you become the house? Well, let's look at higher probability, a baseball analogy here. Not home runs, but base hits. With the World Series going on, kind of an appropriate example. Here's a batting champion with no home runs, Rod Carew. So imagine that. You're the best batting average in the league and you have no home runs. So he won all sorts of batting titles, most valuable player, on and on and on. So what are these high probability option strategies where maybe we can have a higher batting average, collecting premiums, selling specific options? So that's what we call base hit. When you sell an option, collect the premium like an insurance company would. You'd be consistent and patient. You would manage the risk, knowing you will have losers. Manage your reward. Don't get too greedy. But you need the proper tools to make all this happen as you go for those base hits and not swing for the fences. So the strategy we're talking about is a credit spread where you collect option premium. These are insured, predetermined risk and reward. They might be non-directional. So your maximum rewards, the net premium collected minus commissions. And don't worry, I'm going to look at this more thoroughly here with some graphs. And your maximum risk is the difference between the short and the long option strike prices minus the premium received, and of course factor in commissions. So what does all that mean? I'm going to look at that in a second. Remember, we're talking about an option spread, and that means several options combined together at one net price. And they trade as an object is what they call that. So 2 or 3 or 4 or 5 or 6 legs of an option spread all combined together at one net price. And that's the price we're looking at when we talk about a spread price. So here is a credit spread, selling a call spread, bearish to neutral strategy. You sell a call, collect the premium, but you limit your risk by buying a higher strike call. So here you go. You sell a 28.75 call at 4.5. That's the red line here. And at the same time, you buy the 28.95 and you pay 2.25. And that's the blue line. So you see the market down here at 27.50 on the S&P 500. So you sell a call, you collect premium, and you buy a higher strike price call, and you pay less money for that. And that is your, let's just call that your insurance. And the net premium you collect there is 2.25 points. That equals $112.50, minus your commissions and fees, of course. So that's an example of selling a call spread. So you just want the market to kind of stay in this range, maybe even drop or bounce around. You just don't want it to keep going and go through that short strike price. Then the put spread is just the example. Here's an example, the opposite. Here's the S&P around 27.40, let's say. So you sell a 26.15 put, you collect 3 points. You buy the 25.95, you pay out 1. So your net that you collect is 2 points or $100. Because remember, it's $50 a point. And then take your commissions into consideration as well. So those are very simple put call spreads. Remember, we're not doing naked options. These are insured positions. Your maximum risk is capped. These are called covered options. They're not naked, just like that cat there. So if someone talks about trading naked options, you better reconsider, and we'll show you why in just a second. Let's take a look here at a graph of a naked option. Let's say you were to sell a 25.85 put, representing that red line there. So the market's at 2,800. You sell a 25.85 put, you collect some premium, and then all of a sudden Well, not all of a sudden. Over the course of the next month or so, the S&P drops and drops and drops, and you're still short that 25.85 put. What's going to happen? Well, you're going to sit on a loss of almost $12,000, the difference between the short put that you sold and where the current market is. So remember, you need to sell only covered spreads. Naked options equals unlimited risk. And also, you have no margin calls to consider. So if you're doing covered spreads, your risk is predetermined in advance, and so is your margin in terms of the way we trade, and I'll show you that. Now here's a strategy called an iron condor. It's non-directional. It's simply a combination of the call and the put spread that we looked at. And here, I'll show you a chart in just a second. So really, you want the market to be range bound. So you collect premium on the call spread and the put spread, and you want the index to stay between the two. So here's the S&P trading away on a slight upwards bias, and you've sold a call spread above the market and a put spread below the market. You've collected premium, the net premium on that spread, and you're hoping the market stays range bound, and that time just kind of the clock keeps ticking, and we're going to talk about time and how that works. So here is something that we like to call our secret strategy. It's a variation on the condor, and it's called a dragonfly. Don't let it confuse you if you've never heard of it, because we created the name. So here's the same trade, the same market with a condor position from the condor. I'm sorry, now it's a dragonfly. The difference here is, and we'll show you in the demo, but don't worry if you don't quite get it yet. But you're selling the red line here, the 4 calls, and you're buying 3 out of the money calls and buying 1 closer to the money call. So for every 1 you've sold, you've bought 1, and the same thing here. You're selling 4 of the 24.45 puts, represented by the red line. Then you buy 1 higher strike price put and 3 further out of the money puts. And there's some advantages to a dragonfly compared to a condor, and condors have some advantages as well compared to the dragonfly. They're just a little different, and we'll point that out to you. Here's something we call Bet You Didn't Know. What are the advantages of trading the E-mini S&P 500 futures contracts? And you think, well, why are we talking about futures contracts? Well, we're going to talk about the options in just a minute. But it says here, ES futures contracts offer a more cost-efficient way to manage S&P 500 exposure compared to ETFs. Okay, that's interesting. And those are the symbol for that is ES. And they offer more daily liquidity at 8 times the value of all S&P 500 ETFs combined, including the SPY and the IVV and the VOO. You can see the link to that study right there from the CME group. And it says traders are fleeing the individual stock options market. Customers pulling out of equity options trying to trade other products. Customers shifting to futures contracts. 42% increase in futures volume during April. There's the Wall Street Journal article from about 2 years ago. So I think the statistics on that are probably still quite relevant even just a couple years later. And it says here the spread on the bid-ask has grown 30% in the past 5 years. So that's interesting. You don't want a large bid-ask spread, and I'll show you why in just a minute. So that's interesting. That's with individual stock options. But what about the ES options? Remember, we're talking the E-mini S&P 500 futures contracts, and now we're going to talk about the options on the futures contract. So here's a recent report from the CME group talking about order execution. On average, they offer superior execution, and they offer a cost savings of $4 to $15 per contract when you're trading ES options. So that really means the spread between the bid and the offer is very, very tight. That limits your transaction cost. Now, what about some of the hidden cost of securities trading? In the news, you've seen all the latest bigger brokerage firms going to free online stock trading. Well, is it really free? Well, I don't think so. There's something called payment for order flow. So the cost of every transaction is very, very opaque. And what am I talking about? Payment for order flow is where brokerages are paid by a third party, a market-making firm, so that the brokerage will route their orders to them for execution. So that can leave retail orders ripe for exploitation, resulting in less favorable fill prices to the retail trader, costing you more money, and that cost is buried in the transaction. So even though there's no commission, there's still a cost. You just don't know exactly what it is. Here's an article, Robinhood making millions selling out their millennial customers to high-frequency traders. They're well on their way to making hundreds of millions of dollars in cash income by selling their customers' orders to the HFT meat grinder. HFT traders are not charities. The only reason high-frequency traders would pay Robinhood tens to hundreds of millions of dollars is that they can exploit the retail customers. That's an article there from Seeking Alpha. You can see the link right below there. So something to keep in mind. Really, there's no free lunch. We've heard that probably our whole lives. And even though something's advertised as free, in this case with commissions, free commissions, well, there's people making money one way or another off of the orders that are placed. Now with E-mini futures options, there are no hidden costs. These are not security options. These are not stock options. There's no payment for order flow that we just talked about. These trade at the Chicago Mercantile Exchange, the CME Group. No payment for order flow. It's one electronic market for all orders, large or small. All orders receive equal treatment. Your orders do not get sold or distributed to a third party for execution. And there's a variety of expirations on the ES options: weekly, Monday, Wednesday, monthly, quarterly, end of month. At least 3 option expirations every week, maybe 4. And one of the advantages, I think, to these ES credit spreads on the that we just talked about is something we call wiggle room, that highly technical term. So remember, the index is less volatile. So market moves, like in this case here, the market's moving upwards towards the boundary here on the high side. The value of that spread still may not adversely be impacted. And I'll tell you why in just a second. But first, let's look at something called the delta. One of the Greeks, when we talk about the character traits of options, they use Greek letters to describe these. It really means the percentage change in option value compared to the change in the underlying asset. So here's an example. The S&P at 2940. Here's an option at 15 points. So what happens to the value of that option if the S&P dropped to 2930, dropped 10 points? Well, it would gain 25% in value. It would now be worth 18 3/4, and that's because the delta is 0.25. So it gained 25% in value, just that simple. So at the money deltas are 50%, deep in the money are about 100%, and then deep out of the money can be very small, 1 or 2 or 3%. And here's a big secret with delta. We talked about statistics and probabilities. The delta also equals the approximate probability of expiring in the money. So an option delta of 0.25 suggests 25% chance of expiring in the money and a 75% chance of expiring worthless. So that's really the number we are going to pay attention to. What are the chances that an option we're selling is going to expire worthless? Remember, delta is always moving with prices and time. And that does not represent the probability of a winning trade. Okay, so we talked about time. Time decay, let's talk about that. That's called theta, sensitivity to time. Remember, an option has limited life. So theta is expressed as a negative number equaling 1 day of time decay. So if an option's at 10 points and theta is negative 0.05, all other things remaining equal, the next day the premium is 9.95, and the next day after that, 9.90. So you can see that theta decay basically takes advantage of essentially calling it time decay. So every option, if it's out of the money, is 0 at expiration. So this is what gives these credit spreads that wiggle room, taking advantage of theta decay. So you can see here as prices, as time goes by, getting closer to 0 to expiration, the value of the option starts to rapidly decline. So really, we want to be like this guy watching the wall, watching paint dry. If you sell credit spreads, you hope that nothing happens and you just want things to be boring. You want to watch time pass. That is the whole goal. But of course, it's never that easy. We need to be able to consistently manage risk and reward. We talked about autopilot. We're going to talk about that in the demo. Automate your risk and profit management, keep emotions to a minimum. Options can be overcomplicated. How would you even know what spreads to create? Where would you even start? What would you look for? Here's just an example. You can see just captured a screenshot a while back of just one strike price, one series, I'm sorry, option expiration. You can see all the strikes down the middle, all the calls to the left, all the puts to the right. You know, where do you even begin? Just like Jackie Chan looks confused. How would you even know how to create a spread, what strikes, what expiration, what price, what values, where to get in, where to get out? Can leave us all very perplexed. But don't worry, we've done all the background work and all the testing for you. With all of our decades of experience, there's a fresh approach to trading complex spreads. It's called Theta Trader for premium collection, selling time and more with pre-built credit spreads. So what am I talking about? Well, we're going to show you just a moment. A proprietary algorithm creates what we call theta trades. Same strategies sophisticated traders and pros use, available for bull, bear, and even flat markets. In fact, that's what we're going to look at. That seems to be interesting to most people. You know, basically what strategy can I use when I think markets are going to be choppy? And also there's automated risk and profit management with something we call the RTI. So we can automate the whole thing. What do clients say about Theta Trader? It's a superb trading platform. A person with minimal trading experience can enjoy the benefits of sophisticated trading. So we're going to show you this, and we're going to show you how to take action if you like what you see. So let me go ahead and show you the demo. All right, very good. You're now looking at the dashboard for Theta Trader. And now this is just a demo account of mine, so don't pay too much attention to all the numbers over here. But I will explain all these other colors in just a moment. But for now, let's start at the top. We talked about theta trades, and you can see here that there are bullish strategies, there are bearish strategies, and there are neutral market strategies. And then we talked about the ES, or the E-mini S&P 500. We can also trade the E-mini NASDAQ 100 and the Russell 2000 mini. But for our purposes, most of the activity of late is in the ES. So that's where we're going to focus. So you can see here, let's take a look at a neutral strategy. And we talked about the iron condor. So we'll click on that. Now the algorithm has automatically generated these various iron condor spread trades, anywhere from 16 to 64 days till expiration. And they're all pre-populated with the strike prices and pricing filled out for us. So let's go ahead and let's just pick the December end of month iron condor. Now look how cool that is. Here's the first thing I like to do is look at the chart. So we can see the S&P trading away right around 30.40 according to this chart, and selling a 32.40 call, buying the 32.60, selling the 27.40, buying the 27.20. So that's what this looks like on the graph. This is the theta trade. The algorithm generated it for us. It chose the strikes and everything and the pricing, and let's show you all those details. So you can see here, has 64 days till expiration. That option spread was at 2.15 points or 215. net premium of 107.50. All these numbers, by the way, are net of commission, all the performance numbers. And so really here's what you want to look at. How much is required? It's about $900 cash required to place this one particular condor. And your profit potential is about $86 or almost $90. So why would you put up 900 to make 90? Well, let's talk about the deltas. Here's the delta on the put that we're selling, 9.76. So what that says is this option has over a 90% probability of expiring out of the money, according to the delta. And how about the call we're selling? 6.181 delta. So you're talking, let's say 93% probability of expiring out of the money. So that's what we're talking about with higher probability trading, those base hits. Remember that baseball analogy. So according to the delta, we're using, just like an insurance company would, we're using statistics and probabilities, and we're trading only when we think those probabilities, favor our position. So you can see it's pre-populated to sell because we're selling the spread and collecting premium. It has a quantity that defaults to 1, but let's just go ahead and say it's going to be, let's just say 6 to be unique. We'll leave the price at 2.15. And we can just go ahead and click on this button and place that trade. But before I do, keep in mind, you could also trade change any one of these prices if you wanted. So you can change these and Theta Trader will recalculate everything for you. And here's something called the TROC, total return on cash, targeted return on cash. So just about 9.5% on this particular trade. So that is the target on this particular trade. So let's go ahead and press place and watch what happens. Okay, so this is a demo account. It just assumes you're filled, but let's take a look here at the open positions, and we'll find it there. If you were trading for real, that's where you would find it. And here it is, right at the bottom. There's the one we just placed. So you could click on that and get further details. But of course, there's no history yet on that trade. So that is basically how you would place a trade and then look at your open positions. Now let's go back to the dashboard, and I'm going to explain all these colors for you. The best way to do that is through something called the simulator. So you see under trading, we have a trade simulator that allows you to backtest and go back in time. And I've already loaded some simulations here to save a little time. So here is a trade from March 19 of 2018. It's a condor. Let's go ahead and use these buttons to run the pricing. You can see here as you go day by day, the market's starting to trade. We sold these this call spread above the market, this put spread below the market for a condor, and you can see it had 74 days till expiration when we placed the trade. You can see as each day goes by, there's one less day of time. You can see these colors. Now green means all systems go, don't do anything. Yellow means just have a little bit of caution. There's a little bit of elevated risk, but still do nothing. So let's go ahead and just play out the trade. And you can go day by day, or you can just press play and let it play. Now you can see here as time has gone by, the trade went from being in the red to being profitable, and that's because of theta decay. So let's go ahead and keep going here. And look at that, it turned blue. What does blue mean? Theta Trader says the position is now profitable enough so that you could get out of the trade, take some profit, and move on to something else. Now you can automate all this, that's a key. So we talk about autopilot, and I'll show you how to automate all this. So if it turns blue to take profit, you don't have to do anything. Theta Trader will do it automatically for you. So there's a typical iron condor market sort of just chopping around, and then as time decays, the trade becomes profitable and you close it out and move along. Let's take a look at another. Here's an iron condor. Let's see what happens here. Okay, now it turns yellow. It turns orange. Orange means elevated risk, and you can see it's getting closer to the upper boundary on this call spread. That's why it's turning orange. Then it goes back to yellow, back to green, then it turns red. What does red mean? It means get out, too much risk, take a loss, and move on. And remember, you can automate this. So if it turns red or blue, you are automatically going to have Theta Trader will close that position out for you. So there's another example of how Theta Trader can automatically trade for you on autopilot. Now let's go ahead and look at this other simulation. Here is another condor. So day by day goes on, and the trade is, let's say, ripening nicely, and it turns blue. So Theta Trader says take profits, and once again, you can have orders automatically placed for you. So Theta Trader says take profits, and you might think, well, it looks awfully quiet, and maybe I don't need to take profits here. Maybe if I hang on to this position, I can squeeze a little more out of it, because at this point, you've captured about 70% of the total possible reward. Maybe if you hang in there, you get the other last 30% of that position. So you might decide to just overlook that profit order, and then look what happens. It starts to turn yellow. Now you're getting a little bit worried, and then it turns red. So look at that. That's why we like to employ that automated risk management, because if you were left to your own, maybe there are times where your emotions get the best of you and you don't follow the signals. You take a winning trade, and you turn it into a losing trade. So that's what you want to avoid. Now let's look at a dragonfly. We talked about that briefly. Let me show you, before I do that, what it looks like on the dashboard. So we talked about a condor. Now let's look at a dragonfly. I think this will help quite a bit when you see the graph here. So this dragonfly for the December end of month, you can see this is what it looks like. So the S&P trading around 30.40 or so here. You're selling the 32.40 calls, and then you're buying the 80s and the 20s, and then you're selling the 27.40 puts, buying one of the 27.60s and three of the 2700s. So that's what it looks like on the graph. It's just a variation on the condor. So you can see the quantity is always going to be selling 4 of the puts and calls. Then you buy 1 closer to the money put and call, and then 3 further out of the money puts and calls. But you see the deltas on the ones we're selling are the same as on the condor. But you notice here the cash required is, because we're selling 4 options, of course, going to be much higher than just the one option we sell with a condor. So you're looking at $4,600 cash required, profit potential 366. So your targeted return here, about almost 8% targeted return on cash. So little bit lower targeted return on cash compared to the condor. But with that, there's also some advantages in terms of risk, and we're going to show you that. But let's go ahead and place one of these, and you can see the price of 9 points. We'll go ahead and place that. And there it is. So that's what it looks like when you're placing a Theta Trade Dragonfly. So let's go back to our simulator. Let's go ahead and run through a simulation on a Dragonfly. So this looks very similar to what you might experience with a condor at this point. It's starting to turn, the P&L on this turned green very quickly. Then it went back to red, getting closer to this upper boundary. Then it turns blue. So with 34 days remaining in the trade, on this Dragonfly, it turned blue, meaning take profits, and it's ripe enough now to go on to something else. Now let's look at a condor for this exact same time period. So it's the same exact time period, And instead of a dragonfly, let's see how a condor would have performed. So very similar. You see the green RTI just about every day. And then getting closer to the end of the trade, and finally with 2 days till expiration, it turns blue. So interesting. With the dragonfly, it turned blue with 34 days till expiration, allowing you to close out that trade and take your money off the table and do something else. But with the condor, the trade didn't get ripe enough until 2 days were remaining. So that is a big advantage of the dragonfly because you are long a closer to the money call and put compared to the options that you sold above and below the market. So this long option here that you own is going to lose value basically more slowly and conversely gain value um, as prices approach it. They're going to gain value quicker than the ones that you sold or even the further out the one, one that you bought. So the advantage is there are times when you have a dragonfly, and if you compare that to the condor, you're going to have an opportunity to close out your trades earlier and move on and put your money to work elsewhere. So that is really the distinction between the dragonfly and the condor. They're not necessarily, neither one is better or worse than the other. They're just a little bit different. And it's fair to say the dragonfly is probably not, it's going to give you probably more chances to close out trades earlier than the condor, but your targeted returns are also a little bit lower. So that's the trade-off. So you can see here, it just sort of ended up, obviously, I'll point out one other thing too here. You can see how the condor ended up here, and here's the dragonfly. But you notice that there's a few days here in the last few days of the dragonfly where the targeted profit is greater than 100%. And that's because you are long this very close to the money or at the money call option. So anyway, that is a good example of what to expect. Now let me show you here how to do all this. You go under the settings, and I'll show you how simple this is. This is how you activate your risk manager and the profit target directive right here. So this is how you automate Theta Trader closing out your trades for a risk when it's too risky, or for a gain when you think when Theta Trader says there's enough gain there to pull the money off the table. So that easy, it's just that simple. And here are tutorials, by the way, if you ever need some questions answered. These are all video tutorials in Theta Trader. There's also some education if you need a refresh on options trading and futures trading. I'll also want to point out something called TradeScope. That's our proprietary research. We do that every day. So here's an example of what you would expect. This is all tailored and catered to all of you Theta traders out there. So you can see here there is a analysis here, technical analysis, looking at some averages, crossovers, MACD, RSI. Don't worry if you don't know what that is. It's pretty simple stuff when we explain it. So here is an outlook as to what to expect, key dates for the week, technical review, support resistance. So that is good stuff there, all proprietary research in-house. And we do something else called the daily trading summary. And that is more of a narrative of what happened during the day, not only in the US, but in Europe and Asia. And then there are key support resistance zones here, economic calendar, what to look for, any trades that were placed and filled. Then, of course, all the different quotes that in the markets were trading. So great stuff there with the proprietary research. And then also I want to point out, we have something, I'm sorry, not the simulator, the trade builder. Let me get that for you. So if you want to start from scratch, build your own trade, you can. So you can go through any of the markets here, pick any of the contract expirations, pick the strategy you want, and then build your own trade. But most people basically are taking advantage of the algorithm and what it's doing and what it's generating for us. And the trade builder is there just in case, but people do use it. So that is a good basic overview of the Theta Trader platform. And one thing here too is you can look at all your history of your trades. It's super easy. Just look at your closed positions. And let's take a look here. There you go. Just that easy. So you can see all the trades here. You can select any one of them if you want to take in more detail. You can see here out of, well, 20 trades, 20 have been winners in this demo account. So 19 of those were short positions, and one of them was a long position. So that's a good point, though, is Theta Trader will actually buy premium if you want to as well. Was designed for premium collection, but it can buy premium. So I'll show you that in just a second here. And remember, that's a demo account, so you can't expect all your trades to be winners. But so for example, let's say you were bearish and you wanted to buy some put spreads. So just that simple. And it tells you which options to buy, which ones to sell. And here's what it looks like here. So you buy the 28.90 puts and you sell the 28.70 puts. And that's, an example of a directional strategy where you actually buy premium. But those are not higher probability trades, of course. Higher probability trades are when you're selling premium, and that's the kind of the gist of Theta Trader and the focus of Theta Trader. All right, well, very good. Let me show you, I think, what's the next here. What is actually the best feature of all? Let me switch screens. All right, so here we go. I'm going to show you the best feature of Theta Trader. We've saved the best for last. Hopefully you haven't been too overwhelmed because it does get easier. And here we go. Trade alerts, 1-minute trading. So what am I talking about? These are one-touch trades. All you do is touch accept or reject on your smart device, and that's it. These are live integrated orders with your AltaVest account. You just touch accept and the order is placed in the Theta Trader for you. So then from there, if you want the RTI to automatically track and manage your position, you saw how to do that. You just check the box and it does it for you. So here is an example how easy it is. You receive a text message with a link. You just touch that link and this is what you're going to see. Here's an example. Here's an explanation of the trade. There's a graph. It's a condor. Here's how much the premium would be to collect, how much cash required. The quantity is already pre-sized for your account. Days till expiration, targeted annualized return, and that is it. Let's look at that again. How would you like to get these trade alerts and not have to worry about sitting in front of a screen? People love these things, and with good reason. They save you so much time and effort and aggravation, and they're all integrated with your account. You don't have to do anything. You don't have to log into some other, website somewhere and try to copy in. So what do people say about it? For someone with a busy life who doesn't have time to sit in front of the computer, AltaVest is perfect. The best thing about AltaVest are the trade alerts. Remember, don't watch screens. You want to be doing your own thing. Be on vacation with your family, that type of thing. So was this time well spent? I think you discovered something new and valuable. You've probably been looking for something like this, but didn't even know it existed. But we have a special offer for you. Everything you need. 2 choices how to get involved with Theta Trader, the Elite and the Pro membership. And we'll show you something worth over $18,500 and how you can get that for free. So with the Elite membership, here is what you get. You have the Theta Trades, the whole platform. We just saw that. The proprietary algorithm pre-builds the option spreads simple and effective trade selection. You saw the trade tracking, how easy that was. You look at your open positions, you look at the colors. That's all you need to do. Compare it to this. Here's a typical brokerage statement. No idea. You would have no idea what to do by looking at a typical brokerage statement if you're trading all these spreads. Compared to that, look at the difference. So that was a large part of the reason for Theta Trader and why we built it the way we did, is to make trade tracking so much easier. And then also trade management. You saw how to automatically close out your winners and your losers. You just check those boxes, and the RTI and Theta Trader will automatically close out those trades for you. Remember, this is autopilot, non-emotional trading as much as possible with these option spreads. Very unique. You won't find anything else out there like it. And remember how to activate that risk manager and profit target directive right there. I've been doing iron condor trades for 6 years. Your indicator is the best tool for monitoring trades. Well, thank you for that. That's one of our clients. How about the trade simulator? You can do all the back testing. It's kind of a game, really. You can have a lot of fun with it. Use those buttons to move forward and backward in time. Great stuff there. And then Trade Builder. We talked about that briefly. Build any trade you want. So Theta Trades, the RTI, the simulator, and the Trade Builder, yearly value of $35.88. Software, people spend a fortune for software, so I think that's very, very fairly valued. But there is more with the Elite membership. You have private coaching, a licensed trader, one-on-one training. You have sessions for index selection, Theta trade selection, simulator, diversification, trade setups, analysis, alerts, advanced role strategies, you name it. So you get all that private coaching, that mentor. You have a co-pilot, a licensed trader with you who's got decades of experience discussing strategy, reviewing history, a value of over $7,500. And you don't think maybe that number's too accurate? Well, let's look. You have a popular online education firm. I looked them up. Here's what they offer. 10 online option lessons for $5,500, advanced options for $13,000, or lifetime access for $25,000. So with Theta Trader Elite, you have all that training, and it's all part of the package. It's all really embedded within the Theta Trader platform itself. And of course, that coach, that mentor looking over your shoulder. Then you have the trade alerts. Those are integrated with your account. It's one-touch trading. You just touch accept or reject, and that's all you have to do. Trades are tailored for you. Alerts are live, integrated with your account. And the orders are placed and then managed for you automatically if you choose. Yearly value on those alerts. People spend a fortune on alerts, on monthly, quarterly, yearly subscriptions, $4,464. And remember, all you do to get that alert working for you is you check the box right there. Get those alerts under your settings. I love the alerts, keep me informed when I'm traveling. Staff are always there to help when I need more. So what you're going to get with that Theta Trader Elite, you have the Theta Trader platform, private training, the trade alerts, total value over $15,500. Now, Theta Trader could just be that one tool you need, right? Could save you all those hours of time. You could cancel other subscriptions, save money, lower your stress and aggravation. It would be worth it for sure. I know you would agree with that. But as they say, there's more. So remember, we talked about the proprietary research, the TradeScope and the daily commentary. That's expensive stuff if you were subscribed to research from other entities, third parties, yearly value of $2,952. Then we provide, of course, online tutorials. That's all built into Theta Trader. That's all just part of the package. But remember, it's there for you, very valuable. So you have Theta Trader, the training, the alerts, the proprietary research, the videos, over $18,500 value. So even if it were $9,200 at 50% discount, Theta Trader would be a great value, absolutely. But we can over deliver, as they say. So because it is a live webinar, you can receive everything for only $997. Let me emphasize, that's a one-time payment. People will always ask, is that yearly? Is that quarter? No, one-time payment. I'll say it again, one time, $9.97. And there is the link, cf.altabest.com/TT Elite. Here's the phone number. But it is a live webinar. We like to kind of treat our people well. So how about this? We can take 20% off if you act before Sunday night. We like to give you a little bit of a bonus discount there because sometimes our life gets busy. We like something, we think we'll get back to it, and then life takes over and we forget. So this will give you some incentive to get an additional 20% off, $7.97. That's a one-time membership fee for Theta Trader Elite. You get all that stuff for that one low price. And how about this? The Elite equals the helpful AltaVest advisor. The brilliant algo trading system never failed me, and neither did my helpful AltaVest advisor. Patient as a saint. So here's the order form. Here's what it looks like. That discount expires Sunday night. One-time payment, $7.97, and there's a 30-day guarantee for the Elite membership. So 29 days from now, if you decide you don't like it, we are okay with that. If it's not for you, that's fine. You get your money back. Just ask us. No excuses. You're going to love it. You just sign up and you're going to wonder, basically why you didn't do this earlier. It is a one-on-one boutique style of service. The hands-on approach. This is not one of these things where you just sign up and get sent off into the information superhighway ether and you end up just chatting online with a robot. These are real people, real experienced people, and they're going to help you. Theta Trader Elite, $7.97. And remember, we talked about a free membership, $100,000 account or more, $100,000 account or higher will refund that membership fee. Ask us for details. We talked about Theta Trader Elite. There's also Theta Trader Pro. So you've seen this, you love it, you want to do it, but you're thinking to yourself, I've done a lot of option spreads. I really don't need that one-on-one training. Well, that's okay. Theta Trader Pro, one-time payment of only $4.97. In fact, that's not quite accurate. Act now, act today, we'll make it free. Theta Trader Pro, sign up today, one-time payment of free. Doesn't get any better than that. So what that means is you still have access to everything except you don't have that one-on-one training and coaching available to you. You'll still have access to all the other features of Theta Trader, and there's a good example here of just the difference between the Elite and the Pro. Everything's the same except essentially here, the private training sessions. So trading account, yes, you do have the ability to have an IRA account. People ask all the time. What about individual, joint, corporate, LLC, trust? Yes, all those. Now, what about something that you may not be aware of, tax efficiency? Trading ES options or futures options are much more tax efficient than trading individual stocks or individual stock options or ETFs held for less than a year. Here we go. Let's look at an example. Let's say you're trading individual stock options. You have a 20% return on a $100,000 account. Say you're in the highest tax bracket. So you'd then have a $7,400 tax liability or a 12.6% return. Now imagine you are trading ES options, $100,000 account, 20% return. Your tax liability is $5,360. And that is a return of 14.64%. Tax savings of over $2,000 compared to trading stock options. So again, the ES option space is the place to be. If you're not there, you need to be. Remember, losses used to write off other gains or roll backwards. Consult your tax advisor for details. And also with the ES options, there's no more itemizing. You just receive one number at the end of the year with your P&L and you plug that into your taxes. You don't have to do all that wash sale itemizing and all that stuff that you do with stock trading. What do our clients say about us? They've had an AltaVest client for 10 years. Trade alerts included suggestions on a wide variety of types and combinations of trades. Staff has been invaluable in continuing my education in trading index options. Another sticky client, been with AltInvest for 13 years, have been a professional team. AltInvest client for 15 years. So act now equals lots of value. Or you could do nothing, which is 100% risk and reward free, but that's no fun. But you want that membership. There's the elite, and then there's the pro. One of those is for you. I don't know which, but one of them is. You pick the right one, and think you found something that probably connects with you, and you probably didn't even know it existed. They've exceeded my expectations with their pre-selected theta trades. Responding to an alert takes but a minute or two. A chart and parameters are provided. I do not need to spend time at my computer. Jeremy Grantham says, stock market might be 2 to 3% in the next 20 years. Well, he may or may not be right. I don't know. We talked about pundits earlier in terms of helping us with our trading. I'd say his outlook has more to do with longer term, the macro picture, not necessarily trading, but nonetheless, it might make sense to have exposure in something that is not really highly correlated with the performance in the stock market. And as you saw, Theta Trader has lots of non-directional strategies as well as directional strategies too. Summary of the benefits here. You have Theta Trader with the Theta Trades and the RTI, the private training for the elite members, the trade alerts with the one-touch trading, the trade scope and commentary, that's that proprietary guidance, of course, education, and then tax advantages. You saw that tax efficiency. Now, FAQs. We always get the same questions, so I thought I'd throw them in here. Can I trade stock options with Theta Trader? No, we specialize in options on the E-mini stock index futures markets. So you see the yellow E-mini S&P 500, NASDAQ 100, and Russell 2000. And why do we do this? Well, the high growth, the volume, liquidity in the E-mini futures markets are unsurpassed. We talked about the tight spreads, the transaction costs associated with those tighter spreads, much more favorable in the ES space. We can track just one or two markets, not thousands, and there is a clear cost structure. You know exactly what those costs are. It's not opaque. There's none of that nonsense payment for order flow where you don't really know how much it's costing you. Can I use Theta Trader and trade alerts with my current brokerage? Well, we are a brokerage firm, and then we develop Theta Trader as our own proprietary and integrated service. And what is the performance of Theta Trader? Well, as a brokerage firm, every client makes their own trading decisions, so everyone is different. And as a reminder, I talked about this, all performance calculations in Theta Trader, such as the targeted return on cash, those are net of all trading costs. And what are the trading costs? What are the commission rates? Are very competitive. Our E-mini rate is 5.25 round turn all in. So others in the futures option space might say they're 2.25, but remember, it's per side. So they add more fees on top, making the total higher than what we charge. And yes, it is true. There are places around there that are offering less expensive commissions, but the services just do not equate. We offer something very unique and something where you're not going to find at just an online brokerage. But by and large, our rates are very competitive, and others are, like I said, more expensive as well. And this is, remember, this is not stock options. So you cannot compare the futures and futures options space to stocks and stock options. They're completely separate, and the pricing is completely separate. So how much money should I start trading with? Well, we saw that about $1,000 is needed for one ES Condor and about $5,000 needed for one ES Dragonfly. So if you want to simultaneously have maybe 10 or more spread trades diversified among markets, expirations, and strikes, we should suggest a minimum of $25,000. So remember, we talked about taking action if you liked what you saw. Now is the time to do it. Theta Trader Elite, that's $797. That's a one-time charge, and the Theta Trader Pro, available at no cost. You can cross those hurdles. Remember, we talked about too much noise. Well, Theta Trader bypasses all the noise. The algorithm does the work for us, chasing performance. Performance of the trades within Theta Trader are all basically independent, what they call absolute return or non-correlated. And then emotions, we can automate things, automate not only the trade selection, but your trade exits. So there we have it. We're getting close to wrapping this up. And lifetime membership. Remember, $7.97 one time before Sunday night, or you have Theta Trader Pro that's available for free. And you see the link there for the Elite and the Pro. And our phone number, we like to hear from people. We get calls and love always talking to people and getting feedback. So 949-220-2720. So thanks for joining us. I think you've experienced something probably you have not seen before. And do give us a ring if you had any comments or questions, and we'll be here. In the meantime, we'll get a replay out in just a bit. So thanks for your time and have a good rest of the day. Bye-bye.